In today's video, we are taking a look at why Bitcoin could see a move to 89,000. We'll be taking a look at the altcoin market, discussing exactly what needs to happen for altcoin season to continue, the short-term price action, the macro charts, economic data, and so much more. This is a video you do not want to miss. Let's jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are discussing the possibility of a continuation lower into Christmas, potentially as low as 89,000. We are going over the current price action, the key levels, exactly what needs to happen for a bullish reversal, and even the macro charts in altcoin season. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us over in the VIP channel. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll get access to all of our trading setups. You'll get access to all of our group chats, our general chat, our trading chart and education chat, our daily video, our help, and our news chat. If that is what you're interested in, go ahead and contact me in the pinned comment of the free channel by clicking my name. You can also click these two links to find our entire 50+ month trading track record, or a 10-minute video showing you inside the VIP channel itself. Check it out, join up, and we'll see you in there. Let's jump into the video. So as we can see, Bitcoin has continued toward the downside over the past 72 hours, reaching a low close to 92,000. From that low, we have seen a fantastic bounce for Bitcoin, retesting the 4-hourly monthly diagonal uptrend. However, this bounce was not strong enough to reverse the price action, and it was not strong enough to tell us that the buyers are back in control. Once more, for us to see the buyers really step back in control, we absolutely need to break back above the 102.5 thousand high. This lower high level needs to be broken and reclaimed for Bitcoin to continue upwards. Until then, we are underneath the POC level, we are underneath this horizontal resistance at 99k, and of course underneath this 4-hourly, this monthly diagonal uptrend, all representing weakness, all representing the possibility for continuations lower. If we move over to the 2023 December period, we can see a very similar reaction in the price action occurred in December 2023. We had this slow grind upwards against this diagonal trend line, this test nuke toward the downside, followed by a rally to a new all-time high, only then for us to continue underneath the trend line to retest that trend line and then continue to our 39k low, which was of course the entry point or the start point of that diagonal uptrend. If we look at the current price action, we can see a very similar reaction in that price action almost playing out perfectly. We had this massive liquidity wipe, we saw this rally into a new all-time high, followed by a correction, now a retest of that trend line, potentially gearing up for a move into that $89,000 region. So there is a potential for Bitcoin to go lower based on our historical price action, what we have seen from a fractal basis, and of course from a technical and a structural basis, we are showing some pretty strong exhaustion and weakness here, and the buyers are definitely not in control until we are able to flip some of these newly created lower highs. We'll come back to the price action in a second. Moving over to the market data, 24-hour volume is down 46%, 236 billion, pretty standard for the weekend, 61% down for liquidations, 339 million, 224 million coming from longs, 114 million coming from shorts, as a lot of people look to ape back into altcoins and into Bitcoin on this rally, only then to see the short-term corrections flushing them out. Moving over to the DXY, we can see the DXY is still holding above that horizontal level. While it remains above this horizontal high, this 106 to 107 point, we are expecting now continuations upwards. We are looking at around that 110 region, expecting continuations over the coming weeks, provided these highs hold. If we drop back below these highs, the bearish continuation trigger is going to be the low at 105. A loss of 105 will confirm continuations back into that midline, potentially the lower region of this high time frame channel. Until then, expecting continuations which could drag the risk asset market down momentarily for another few weeks. Something to consider. Looking at the S&P 500, a pretty crazy weekly candle here on the S&P 500, managing to actually close just over 6,000 being a psychological level, so it's going to be very interesting to see how we open up on the weekly. But from a structural perspective, ever since we entered a macro uptrend, we have been developing a very particular pattern, and this is our highs that we establish, we do not break. At the most, we come back down to retest them. So we saw a high establish, we saw a higher high, we saw a higher high, we came down to retest that prior high, we rallied back toward the upside, creating a new high, retesting that prior high, and in fact, this is the first time we've actually broken back below a prior established high point. So in this instance, we can see some structural deviation from the pattern we have seen play out since May-June 2023. This could be a local top for the S&P 500. And it could be the beginning of a reversal for the S&P 500 toward the downside. Will this be a macro downtrend? I don't think so. For us to see a macro downtrend start, we are going to need to drop below this 5,600 level. So even if we see a correction into there, we could then continue upwards. But if we do drop below 5,600, I would be turning macro bearish on the S&P. Currently, I am short-term bearish. I'm looking for downward movements. If we do break back above these highs, I will then be bullish again. But for now, I'm short-term bearish. And if we drop below 5,600, I will be turning macro bearish. As I've said the entire month, December is a month to be cautiously optimistic and do not over-position yourself and make sure to take profits. That is the narrative we've been playing. We've been playing by the narrative of invalidations. For like 2 months now, we've been stating we do not have particular higher targets. We are simply trading based on an invalidation method, meaning while the trend is objectively bullish, we will remain bullish. And when that bullishness starts to dissipate, when we see exhaustion develop, when we start to see these trends crack, we will slowly start to de-risk, we will take profits, and we will sweep toward the downside. Let's jump into the broader analysis, guys, jumping into Bitcoin. Before we do, if you were interested in supporting the content, supporting the channel, and supporting yourself, you'll get a lifetime trading fee discount of 15%, which can build up to 45% simply by joining any of the links down below, BitGet, BitUnix, or BingX. Check it out, support the content, support yourself. We'll play an ad and we'll jump into the content. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump in. So first and foremost, we do have Christmas just around the corner, Christmas, Boxing Day, the whole Christmas season, and generally we do see volume strip from the market. We see a lower volume climate. Now with lower volume climates, of course, we generally see a little bit more manipulation. It is easier for the price to wildly fluctuate and swing around, so we do have to be aware of that first and foremost. if you are trading aggressively moving into the holiday season, you are really doing yourself a disservice. There are times when you should be aggressive in your position management. There are times where you should be more conservative. As I've been saying this month is a period to be more conservative, particularly now as we move into Christmas. Now, I do want to start by taking a look at what we saw in 2023. The fractal we talked about many weeks ago from 2023 has so far played out as well as you'd expect a fractal to play out, right? There's never going to be perfect. History doesn't always repeat, but sometimes it does rhyme. It shows us similar kind of patterns that we have seen historically. And this is a pattern that we can see playing out in the current day, very similar to what we have seen historically. I actually want to go ahead and talk about this very briefly, as it could be shining a degree of light on where Bitcoin may move to over the next few weeks, moving into the end of course, 2024 and into 2025. Now, we posted this chart back in December. This is the start of December, about 18 days ago. We told you that we saw this flash correction in 2024, very similar to what we saw in 2023. And from that point, we've been talking about the possibility for a correction moving into the Christmas period and potentially moving into the new year, as we saw in 2023. So in 2023, we saw this slow grind upwards along this uptrending trend line, spanning around about a month and a half. We then saw again this massive liquidity flush, followed by a rally to all-time high, followed by then a massive move toward the downside, retesting the entry point of that uptrend, the initiation point of that uptrend. If we see that same thing play out in 2024 in the current price action, that would suggest we are going to see a move towards the $89,000, $86,000 region. So we do have to be aware that that could be a move we are expecting. And in fact, I am going to be expecting, as I've said already, I expect continuations lower provided the charts are bearish. We'll talk about what needs to happen for the charts to turn bullish in a second to invalidate that. But the key levels we are watching are going to be marked out by these horizontal levels. Again, 94,000, we hit that level. 92,000, we came very close to that level. We are then watching this 89,000 region and this 86,000 region, which is where that uptrend initiated. Worst case scenario for Bitcoin, we could see a repeat of 2023, moving into that low, grabbing that low side liquidity, only then to continue upwards into a new all-time high at the start of 2025. That is very possible. So at the moment, we are expecting continuations lower. We are bearish on Bitcoin while we remain underneath this diagonal uptrend. If we break back above this diagonal uptrend, that is not going to be enough. We need to see the 102.5K region. We need to see the price not only break above that level, but we need to see the price show some significant strength at maintaining above that level to indicate to us that we are then going to see continuations. Until then, this should be considered a local top for Bitcoin, as what we saw back in 2023. So to keep it simple, I'm expecting continuations lower for Bitcoin moving into Christmas and potentially even the new year, potentially into maybe early 2025. And if we do see those corrections play out and we see the price action come into 86, from 86, I will then be expecting a complete reversal back toward the upside for Bitcoin if 86 does not break toward the downside, right? If we see the price action drop under 86,000 and we see deviation below here, and then we retest as resistance and we see some sort of retest, resistance support, retest over here, I will be again expecting continuations. The reason we have this massive low volume historical resistance range between 86,000 and 76,000. If we do see the price action sustain under 86,000, we are entering that low historical resistance range. And if we enter a low historical resistance range from a position of weakness and negative momentum, the bearish volatility is expected to significantly increase to the range, and we will likely see flash corrections through that price range. So it is absolutely paramount that Bitcoin is able to sustain above 86,000, and that is the lowest we see the price action go, while we can still remain high time frame bullish. If we do drop below that region, I would be expecting to see stronger corrections that could potentially see we're talking a multi-month correction, 1 to 2 months of downward movements to retest monthly levels of significance if that does occur, and that could impose significant damage on the potential for macro continuations higher if we see that move. So that is the worst case scenario for Bitcoin. We see a correction into our lows. This is going to be our reversal point. So we do see 86K tested. We will be looking for reversals not only for Bitcoin, but we'll be looking for reversals for altcoins as well. So this is going to kind of be like our bidding area. If we do see that level tested, we will be bidding and expecting continuations, of course. And alternatively, if we don't see that move downwards, but we see that move over 102.5, that will be our re-entry point as well. So we have this range over here of kind of indecision, mostly for the market. And we've seen that indecision very much present in this range. If we look back at just the last month of price action, there's been a lot of chop, a lot of indecision, a lot of liquidity grabs. The market isn't sure what it really wants to do here moving into that Christmas period. So again, when we had any sort of uncertainty with Jerome Powell's speech coming forward and kind of, destroying the perception of what interest rate reductions will be like in 2025, kind of, reshaping what people are expecting, that uncertainty here injected into the risk asset market is now showing with the risk asset price action, right? We've seen a lot of de-risking going on with our stock market, with cryptocurrency, particularly with more speculative investments such as altcoins. We're seeing Bitcoin dominance go up. So we're seeing what that was, that policy shift manifest in the price action. And until we'll see that policy, which is driving the price action on the short term, change or erode, it is unlikely we see the direction of price action take a complete 180. Remember, policy stipulates demand. We don't just randomly see things move up. We don't just randomly see things change in the market. There's always a reason behind why things occur. And again, we can take you back to this chart very briefly. And I've talked about this chart, many times on the channel, particularly a lot at the bear market bottom. And at the end of last cycle, we talked about this a lot, but there are videos on this channel explaining it. If you can understand this chart here and understand the two charts below it, and then the flow chart, you have everything you need to understand how policy and how the economic climate directly and indirectly impacts the risk assets, and you can use this information at a very high degree of success to project what is likely to occur next. And again, when we look at things like this, when we look at this chart over here, which assesses the variance between different asset classes such as cryptocurrency and Bitcoin, and compares that against the beta, which is essentially the risk, and when we factor in the perceived systematic risk, which is derived from interest rates, inflation, economic policy, all these things that we see, in the economy that affects, not only people's decisions, but their emotions and perceptions, what is likely to occur next. We can get a pretty good understanding of what is likely going to occur on the short term, while those expectations are still in place. So until we see that next interest rate decision and we see the interest rate drop again, it is likely we are going to still have this degree or this cloud of uncertainty around the risk asset market until we see that interest rate come back down, which is still likely, right? It's still likely we see interest rates drop, but the perception now is that we won't see as many, or they're going to be more random, not so much consistent through 2025. So moving back to the price action, we are expecting continuations. Policy stipulates demand. Demand is now drying up, okay, as there are risks of, interest rate pauses, or maybe even inflation coming up too fast, and then we go back into interest rate rises. A whole bunch of things that are pushing the asset market down. So we are definitely factoring in that, in combination with the lower volume environment, which we move into in Christmas, in combination with the charts showing structural weakness and a very clear downtrend, which has developed and has not yet been eradicated. And then factor in the fact that in 2023, we saw a similar fractal. We saw the price action behave in a certain way. And we know price action doesn't always repeat, but sometimes it does rhyme. So we have all these pieces, all these dots connecting that is suggesting we could see lower for Bitcoin, and we don't want to go against that. And even if it is wrong, it isn't information you want to fade, and that's the most important thing. It is very easy to take profits, deleverage yourself, and then re-enter when the market is looking healthy, rather than just like, I'm just going to hold through every single drawdown and just hope that it eventually reverses, because that's what gets people stuffed at the end of the cycle. They just hope that this dip is just a dip before we go to new highs, but eventually the dip just keeps dipping and then it's over. So don't get caught up in that. I know not everyone's a trader, and if you're a long-term investor, maybe your goal is to stack Bitcoin, and you're using that as a means to, acquire wealth outside of a, centralized government bank or whatever. That's fine, right? There's a whole different means. But if you're looking to profit the most, if you're looking to trade, you need to be active in your decision making. You can't be passive in your decision making and relying on hope for things to play out. You need to be active. You need to make decisions. So for Bitcoin, that is what I'm expecting. I'm expecting continuations lower, okay? And I will turn back bullish when we start breaking above these lower highs. I'm watching the first lower high at this 100K level, psychological resistance, of course, and the most important one, 102.5K, 102.6K, around that region. Secondly, again, guys, our key levels we are watching for reversals from will be every single one of these gray boxes, but the most important one is 86,000. If we do lose 86,000, we do run into a risk of seeing some high time frame invalidations occur. Look at our macro chart. We are very much bullish. There's no doubt we are bullish in the macro. Absolutely no doubt we are bullish in the macro. But what happens on the short term eventually develops into the high time frame, right? These charts are massively lagging compared to the hourly, compared to the 4 hourly. So we start to see a massive weakness and structural breakdowns on the 4 hour, on the daily chart, that can bleed over into the macro, and then bang, a macro self-signal prints after the prices drop 20%. So you need to be aware of those things as well. Let's move over to the total and Bitcoin dominance to wrap up. Bitcoin dominance still very aggressive, 59%, massive push toward the upside again, all sparked by the uncertainty driven into the risk asset market. Okay, that is it. That is the whole reason we've seen Bitcoin go up, Bitcoin dominance go up, sorry. Money exiting altcoins, exiting speculative assets, but remaining in cryptocurrency, moving mostly to Bitcoin. Bitcoin dominance taking up more of the market share as money exits altcoins, and simply Bitcoin dominance is going up. So this is a good indication of, again, not only public perception, should I say, but the climate of the market as a whole right now in regards to where that money is most likely moving, and again, where it's safer to have those funds allocated. Looking at the total, all hope is not lost for altcoins. We'll just say that. The altcoin market is actually technically bullish while it remains with 840 billion. It is currently sitting at 923 billion. The horizontal level we want to sustain above is the yearly dead cat bounce high. 840 billion, the altcoin season trigger. If we look at the prior cycle, this level when we broke above that level, we entered the altcoin season. We remained in the altcoin season for about 18 weeks, and then we made a top, and then we saw a correction, 50-60% pullback on altcoins, only to then see another high at the end of the year. Okay, so 18 weeks, we've been about 5 to 6 weeks now. I think this is the end of week 5, so we're starting week 6 next week, which puts us like exactly 1/3 of the way through altcoin season, if we're looking at our historical date range trends. So a lot can happen in the next 12 weeks. A lot can happen for altcoins in 12 weeks. But the thing that doesn't have to happen, the thing that we shouldn't see happen, is the total 3 break back below this high. And if we see the total 3 break back below the high, that could indicate, well, this was the altcoin season. It didn't have the strength to sustain. We have seen this massive sell-off again. Altcoins are showing significant weakness, and that's it for now. Okay, and we could see some sort of other cycle, some sort of other altcoin season that we haven't seen occur before. It could just be completely different. Maybe we don't follow what we have seen historically. But in terms of what we have seen historically, we have got all 3 of those validations right. We have got Bitcoin dominance falling. We have got altcoins breaking through that horizontal yearly resistance. We have got Bitcoin creating that local top. So we've seen all those 3 validations before. And in fact, we saw a massive move for altcoins, 840 billion to 1.13 trillion. Most altcoins went up 100%. Some went up 500%. So this was a successful short-term altcoin season, but it didn't live up to the expectations currently. And that might change as to what we saw in 2021 and even 2017, but we do have to remember 2021, we had a crazy policy going on, the stimulus packages, everyone working from home. We'll never see a 2021 cycle again, I don't think, okay? And then 2017, again, there was much less altcoins, like 2,000 altcoins or something in 2017, if I remember correctly, when I was around. Now there are like 2,000 altcoins created a day, maybe even 2,000 created an hour, who knows? So the pool of which money can flow into now is significantly larger, so it's unlikely we'd see these singular coins pump as much as we did in 2021 or 2017. That's something to consider as well, because there's more places for that money to go. Even if the money does 10 times more money, there's 100 times more altcoins, so mathematically the money isn't going to get distributed as what we saw in the past from a percentage basis. But that's it, guys. Thanks for tuning in. Have a fantastic day. Enjoy your Christmas season. Stay safe in the market, and we'll catch you back in the video tomorrow. See you then.